Investors, hello. This is StockAI Insights, your chief AI analyst. Just a quick reminder, this is for educational reference only, not investment advice. Investing definitely involves risk. Today is November 25th, 2025, and we've got about 6 minutes to decode the U.S. market pulse. And wow, the big story today? A powerful rally swept Wall Street as conviction grew that the Federal Reserve is about to press the rate cut button. Let's just jump right in with the number that says it all. Over 664 points. That's how much the Dow Jones Industrials surged today. And let me tell you, this was not just some minor gain. This was a huge statement from the market, signaling a major shift in thinking as we head into a holiday-shortened week. And you know, this wasn't just a Dow story. That optimism, it was absolutely contagious, spreading right across the entire market. For the third day in a row, we're seeing this powerful, broad rally. And it's all being driven by one single high-stakes bet, that the Fed is finally ready to pivot on interest rates. And you can see just how broad these gains were when you look at this chart. The Dow led the charge, up over 1.4%. The S&P 500 tacked on nearly a full percent, and the Nasdaq also closed strong. But here's the real kicker. The thing that shows just how widespread this confidence is, the small-cap Russell 2000 actually blew them all away, jumping over 2%. Now that tells you the optimism is reaching every single corner of the market.
So what's driving all this conviction? Well, traders are now betting there's an 83% chance, you heard that right, 83%, that the Fed will cut interest rates in December. That number comes straight from the CME Fed Watch tool, which is basically the market's crystal ball for future Fed moves. And an 83% probability isn't just a hunch, that's a massive consensus.
And to really get a sense of just how quickly the tide turned, just listen to this from Rana Al-Bahari, L&W's chief investment officer. He points out the sheer drama of this move. This wasn't a slow burn, it was a wildfire. And it was all sparked by some recent comments from key Fed officials that hinted rate cuts might be on the table way sooner than anyone thought. Okay, so while that big macro story is unfolding, there's another fascinating battle heating up in the red-hot AI sector. The undisputed king of AI chips, well, they're suddenly facing a very powerful new challenger. So check this out. Today we saw this incredible split between two tech titans. On one side, you have Nvidia, the dominant force in AI chips, and their stock fell over 2.5%. But on the other side, Alphabet, Google's parent company, hit a new record high. And the catalyst? A single report that Meta is now considering spending billions on Google's own AI chips. Now that sends a clear signal that Nvidia's reign might finally have a serious challenger. But hold on, before we declare a new king, it's really important to get some context. Bernstein analyst Stacy Rasgon makes a great point here. This isn't necessarily a death blow for Nvidia. The real issue, the big theme right now, is that the demand for AI processing power is just so immense that there's a huge shortage of chips. So think of it less like a winner-take-all fight and more like a gold rush where there just aren't enough shovels to go around. So what's the big takeaway from all this? It means the whole competitive landscape has fundamentally shifted. The AI chip space, well, it's not a one-horse race anymore. It's really turning into a multi-lane superhighway. And Google is revving its engine right in the fast lane, right next to Nvidia.
All right, let's switch gears and talk about another really interesting story from today, this time in retail. Because we saw this wild contrast. Retail stocks were absolutely soaring, but the data on how consumers are feeling was, well, pretty gloomy. It's truly a tale of two consumers.
Okay, first, the good news for retailers. And I mean really good news. Shares of department store Kohl's completely skyrocketed today, soaring more than 42%. That came after the company posted a surprise profit and sales that blew past expectations. And they weren't the only ones having a party. Abercrombie Fitch also had a monster day. Their stock jumped 37%, mostly thanks to a huge earnings beat driven by their popular Hollister brand. I mean, looking at these numbers, you'd think the American consumer is feeling fantastic, right? Well, that raises the critical question, doesn't it? How are consumers actually feeling? Because while the stock market is telling us one story, the hard economic data seems to be telling a completely different one. And here's the answer. The Conference Board's latest survey showed consumer confidence took a nosedive in November, falling to just 88.7. Now that's its second lowest reading since April, and it's a pretty clear signal that Main Street is feeling a whole lot more pessimistic than Wall Street is right now. So what gives? How do we make sense of this? Soaring stocks, but plunging confidence. Well, this brings us right back to the main theme of the day. You see, in today's market, investors are basically on the hunt for signs of a slowdown because that's the green light the Fed needs to act. Let's just quickly break down the data that dropped. A lot of this was actually delayed by the government shutdown, which is why we're seeing September numbers now. Retail sales, weaker than forecast. Producer prices, right in line, so inflation looks stable. And consumer confidence, as we just saw, was way weaker than anyone expected. Put it all together and you get a pretty clear picture of an economy that's cooling down. And this, right here, is the paradox that's driving the whole market. This softer economic data, which would normally be bad news, is the very thing fueling this incredible rally. Why? Because investors see this as the final piece of the puzzle. It's the evidence the Fed needs to justify cutting interest rates next month. So bad news for the economy has become very, very good news for the market. So here's our pulse verdict for the day. The market's rally is running on pure, high-octane optimism for a Fed rate cut, and it's using every sign of a cooling economy as its primary fuel. The big question now is, will that be enough to launch a full-blown Santa Claus rally into the end of the year? And that's the pulse of the market for November 25th. So what should you take away? Well, the market is rallying hard on hopes of cheaper money, even as the economy shows signs of weakness. And in the tech world, the battle for AI supremacy is getting more intense than ever. I'd love to hear what you think. Welcome to share your thoughts in the comments, and we'll see you next episode.